Hi traders, and welcome to Pepperstone's Technical Analysis Market Wrap on Friday the 10th of July. So gold has been the star of the show this week. It's finally broken that 1800, which we've been waiting for quite some time, and it's done it quite well. So there's a couple of good technical setups on some of the majors as well. So we'll jump straight in and see what we can find for this Friday. So I'll start out here on the Aussie USD daily chart. It's done a whole lot of nothing really this week. You can see it's been floating in a range of, sort of 80 pips really. Hasn't really done any more than that. It's still really correlated with what the S&P 500 is doing. You'll notice on that one when we get to that it hasn't done a hell of a lot at all. So yeah, it's really a wait and see on this one. It seems to be struggling to get past this level. And MACD is starting to drop now, which is no surprise because the histogram is obviously a reflection of the moving averages 12 and 26. So they're obviously starting to come together. So the histogram's getting smaller. That's going to happen when you get 5 days of not a lot of movement. So the moving averages start to contract, and price starts to you look at it here and you think, well, probably the 20 is a logical target for it. Like I said last week, the upside has obstacles everywhere, really. Every 20 or 30 pips it's going to have a problem where the downside has a little bit less. So I'd like to think that it'll come back down and touch the 20. We could probably get, it's more scalping opportunities than anything else on this one still. You can take it to the smaller time frames. You can still see you're getting some patterns in. You've got basically a pretty solid resistance point here. You've got a bit of a double top happening here, but in a sideways market it's a little bit difficult because obviously where this double top is, it's going to run into trouble pretty much as soon as it breaks the neckline all into this mess here. So really what we want to see is a move down to actually break out of this level here and then start pushing down. That's where the real gold is. So I'd like to think that with a little bit of luck we'll get a movement, a lower high and lower low on the smaller time frame. We can go down again. What you want to see here is a lower high and a lower low. Even on a 1 hour chart we'll do it. Get a moving average crossover, and with a little bit of luck we'll start to test this 68 level here. So we'll get down to that sort of 68 80 probably is the key, like in this zone. So it's really a scalp. Not much more you can do but scalp this one for now until it breaks out of this range. So just a watch and see on that. The US dollar CAD is the next one we'll look at. Really strong support on the 200. It's bounced off here pretty nicely. It's trapped between the 20 moving average and the 200 now. It's still, this has been a little bit the same. It's been a little bit sideways this week, but the moving averages are starting to obviously cross above. You can see here the MACD is starting to rise, not very far off getting into the above zero zone, which means that the 12 is going to cross the 26 from below it, which is obviously a good sign. And look, it's probably looking longer than it is short. I don't really want to see this one go short, mainly because the trading opportunity seems to be the long. So, we've obviously traded what we see, so we have to wait and see on it, but it needs to break above this 20. And if it does that and closes above the 20, maybe gets past this 50, ideally we want to see this one get back into this zone here at around that sort of 138.50. So, and there's a good 200 or 300 pips there. So that's what we want. We want to see a change of trend. Still not there, as you can see. The 4 hour still struggling. And it's been here for a little while, this one. So what you probably want to be looking for is a change of trend on the 4 hour at the least to convince us that it's going to go long. So what we want to see now is a pullback here. Make sure it doesn't make a lower low than here. Get a higher low and then break this zone here. So you get that lightning bolt effect that we always like. And that will give us enough confidence. Once it gets past this level here, that sort of 136.70 level, it's got pretty much a couple of hundred pips of pretty plain sailing. So that's definitely the preferred trade on the CAD. So this is where we want to take it. We want to get past this level here. Yes, this part's going to be a little bit annoying, as you can see, that 136.70 level. But once it gets past there and gets past the 50 moving average, this is not going to cause a great deal of difficulty here. I wouldn't think. It would probably more than likely find the resistance at that 138.60, the hard part. So a couple of hundred pips there. So it's pretty good. That's why we really want this one to go long. We want to see the change of trend on the 4 hour, get it long, and long it into this really strong resistance point, which was really good support here. All right, we'll go on to the euro now. The euro, again, it's been one of those ones that's done a whole lot of nothing this week. It's been up and down and all around, but its ranges have been, like this is a daily chart. So, it's been everywhere from 112.20 all the way to sort of 113.60. So the ranges haven't been too bad, but it's not looking like it wants to do anything in a big hurry from a longer term standpoint. So we have to go to the smaller time frames to find the opportunities in here. And you can see, like, the 4 hours been a little bit sideways as well. But if you go down to a 1 hour, you have had some scalping opportunities. So you've had obviously the bounce off the support here around that 112 sort of 50 area. You can see that it's bounced off there a few times, had a couple of rejection candles. It had the moving averages in front of it. Look, this hasn't been my favorite trade. This has been a difficult one to actually get into, even from a scalping sense, because realistically, it's going sideways in the moving averages and everything is in its way. No matter which way you look, you have to go to a really small time frame to actually get scalping opportunities on it, and then you're only going for really small trades. So yeah, certainly not one of the favorites, this one at the moment, until it gets out of this really messy zone that you can see that it's in at the moment. It needs to either break higher and convince us that it's going to break past this high, or indeed break lower, but it's got a lot of work to do on the low side as well. So yeah, this one doesn't really excite me. Probably the better trade is for it to actually go long. It does need to get past this level here. Put a line there for us. It needs to get past this area here and break a close above it. So it really needs to get above 114 sort of 30 and have a daily close above there to convince us that it's going long. And if it does that, then it is very plain sailing. But the downside is quite messy. So I mean, you can see you're going to have support zones everywhere all the way down, literally every sort of 50 pips. So certainly no long-term views on this one until it does something dramatic. So it's all about the scalp on the euro. So go for those 20 to 50 pip moves, and try and capture those in between the support and resistance zones. All right, pound USD. This has been the stronger of the majors really, and it's given us the good patterns. You can see that this is a 4 hour chart. It's been going a series of higher highs and higher lows for quite some time now. It's found the support on the 20 moving average, which is always a good sign for an uptrend, which is great. So you can see here that it's pulled back now to is a little bit. It's just all it's done is really pretty much pulled back to a little roll reversal area. Not a great strong one. We'll go to a daily and see. You can see here. You have to go to a daily to actually see exactly where it's at. This level here provided pretty good resistance, but it came as no surprise. And this is why you have to go to the bigger time frame to see where the obstacles are. On a 4 hour, it's not absolutely obvious, apart from this resistance here, why it stopped there. But when you actually go to the daily chart, you can see that it actually pretty much hit the 200. So that's no real surprise. We wouldn't be expecting it to be breaking this zone without any trouble here. Obviously we're going to be finding trouble, and you can see that you've got basically a gravestone doji right off the 200, or only just a couple of pips off it. And so there was no surprises that it was going to pull up there. It finds itself now at the little mini resistance level here, but this is all pretty much the same zone, right? So you're only talking a handful of pips. So if you're going for the longer term trades, this is probably running into trouble now. It's gonna have a great deal of difficulty getting past this. You want to see a really big resurgence in this area here and a close above the 200 before I'd be taking this any longer. So probably the trades are now, even though it's had strength, the power is starting to leave it. The MACD is starting to drop, as you can see. We've had the rejection candle, so probably looking to potentially short this one back to the 20. On the daily. So there's about 100 pip range there that you could look for shorts on. So you can see the 4 hours pulled up there. Okay, so that's the importance of looking at the key support resistance zones. When you draw them on the bigger time frames, like on the daily as we saw there, you can see that it's smack bang into a 200, and previous resistance certainly pulled it up. So now what we're looking for is probably a move down to the 20 here in the first instance, which is about 25 to 30 pips away. Wouldn't surprise me to see it do that. Maybe have a bounce off there, go to a lower high, and then maybe look for that change of trend. So start looking for shorting opportunities. Signal line's about to exit the histogram, which is always a good sign as well. So yeah, probably shorting opportunities more than anything else on the pound, just mainly because it's got so much resistance in front of it. It's got a lot to do before it breaks that. But if it does break that, then you take it longer. But the preferred trade here is on the short side. All right, we will go to the dollar index now. Again, this hasn't done a hell of a lot this week. It hasn't been able to break past the 20 moving average on the daily. It's come back down to this support level again. So yeah, that's all good. It's providing this little bit of strength that we've seen in the past few hours, has seen the resurgence of the US dollar CAD as we saw earlier. So that's pushed that power up a little bit. This needs to get above the 20 and start to track its way up for the CAD to fulfill its destiny that we saw earlier. For the CAD to get to that sort of 138 level, this definitely has to break past the 20. So you need to be setting alerts to see if that's going to happen. MACD is rising on it, which is always a good sign. We know that the fast moving average is starting to get closer to the slower one from underneath it. With a little bit of luck, it'll cross above it and get past this 20 moving average. Stochastics is also showing divergence, which is pretty good. RSI is rising, so it's got a little bit going for it. But again, it has to do it. It hasn't done it yet, so we'll just keep an eye on this one. But if it does close, a daily close above the 20 would be a very, very good sign, and I would be looking at taking that CAD long at that point to get it to the 138.50 to 139 area. All right, the last one we'll have a look at is, we'll have a look at the S&P 500 first. I just want to highlight really that, obviously it's been in a sideways movement. You can see here the 130, 150, the 3151, level has been a really, really tough level for it. It's been really, really good support and resistance. Having a great deal of difficulty going either way on it. So again, nothing's changed on this one. Our outlook is still scalped between the two ranges, anywhere between 3,200 and probably 3,000 probably is your go really. You can definitely get down to the 3,000, which is this level here. Any scalping in between there, you need to go to the smaller time frames to isolate the opportunities, but even the 1 hour is quite sideways here. So one of those ones where I think you just, if an opportunity is there at a good level, I wouldn't be trading the middle of it. I'd be waiting for it to get to the higher parts, because at 3151, it could go to 32, or it could go to 3,000 just as easy. It's giving us no clue as to which way it's going to go. So you're kind of having a guess. So really what you want to be doing is shorting off these levels here. Looking for shorting opportunities and longing off these ones. Having a guess as to which way it's going to go is a little bit riddled with too many guesses really. So wait for the price to tell us what it's going to do, and then trade the ranges in that channel, and you'll get some pretty good results, I think. Okay, the last one we'll look at is the ASX 200. So this has had a bit of a nothing week as well. This is a daily chart. It's been as high as 61, and it's basically been, pretty much on a slow now, really. As low as 58, sort of, 58, sort of 90. So it's about 20 points off its low. So it's been pretty tight, and this doesn't, like I said, this is doing the exact same thing as the S&P 500. So no real surprises. The only thing with this one is it does find itself at a little bit more support. Like it's got the 20 moving average right there, but it is a little bit, for trading this one, you're basically going to have to go to really small time frames and just basically take the scalps. You can see that it's been respecting the 20, which is always good on a 1 hour. You can take it down to a 15-minute, and you can probably get a bit of a gist of what's happening here. But again, you've got to be pretty sharp in these entries. You don't want to be longing this one for big periods until it actually breaks past the key zones, until this one gets past this low level here at around that. It needs to close below the 57.50, or it needs to close above the 61.80. If it does either of those things and gets past this 200, then it has got a good range of movement. It could easily go sort of to the mid 65s, which is probably unlikely given the circumstances that are controlling this one. The short is probably the more likely option, given that we've got a lot of problems with the economy, obviously, that haven't been sorted out yet. So the short is the more likely scenario. But it's got a bit of work to do to break the 20. It's got to break the 50 and a bottom Bollinger Band. But if it does get past this 57.50 and closes below it, it's definitely got that probably 150 to 200 pip movement down to the 5,500. So scalp for now, but it's not the best scalp. There are better. So probably keep an eye on this one and set the main level, set alerts for the main levels that we just talked about. Well, I hope everybody's had a great week's trading. We've had some pretty good opportunities. The technicals have been good. And it looks like we're starting to set up a couple of nice potential moves for next week. So I hope everybody has a great weekend, and I look forward to seeing you all next week.